Hey guys, we're back today with Melissa. She's one of my favorite lenders. Today we're going to talk about something that's coming up that I just heard through a grapevine. And that is the news that I'm actually a little bit troubled to hear. And that is that apparently starting in April 2023, it will cost just a little bit tinier more to use a conventional loan. Conventional loan, for those of you who are not sure what kind of a loan it is, it's not the first-time buyer loan. So there's first-time buyer loans, which is governmental loans, and there's conventional loans for everybody else, right? So from what I've heard, Melissa, there's some kind of an increase that's going to affect those loans. Can you tell us a little bit more?
Unfortunately, there is, yes. So the conventional loans, which are sold ultimately to Fannie Mae and Freddie Mac, those are two other ways that people might have heard about conventional loans. Mm-hmm. Those loans are going to get a little bit more expensive for people who have credit scores below 740 and for people who have higher debt to income ratios. So traditionally, conventional loans have been priced where if you have a 740 credit score, that was the best score you could have for pricing purposes. And it didn't matter if your debt ratio was 29% or 49%, you got the same rate. Now they're changing it to be more risk-based, and they've really followed the model of pricing that the mortgage insurance companies have used for many years. So higher debt ratio equals higher rate. Lower credit score equals higher rate.
So just to translate it, let's just say we take two different applicants, right?
Mm-hmm.
Just to kind of bring it a little bit more closer to how we can understand it. Let's just say that they're both looking at the $400,000 home, but one person has a credit score of 690, and another one had a credit score of 790. Mm-hmm. What would be the difference for them? Like, how would they know that there's a difference?
It would quite likely be about a point difference.
A point difference? So yeah. Let's just say, and if it was a point difference in their loan, what do you think approximately, just, I know it's not exact, but approximately how much would they be, this 690 guy would be paying more than the 790?
So probably, I mean, it'd be the difference between maybe a rate in the high sixes and a rate in the high sevens.
Okay. So their monthly payment is going to go up, right?
Yeah. And I think potentially some of those people with 680 credit scores are going to want to take another look at FHA.
Okay.
And
then you use FHA instead, right? Yeah. Because they're losing out on a conventional.
Yeah.
Gotcha. But also you said that there's two things that are affecting it. Let's just say they both have 790 credit score.
Mm-hmm.
But one has a debt to income, let's just say 50%, and another one has debt to income, let's just say 20%, right? So then again, tell me what to expect.
The difference isn't going to be quite as huge as it is in credit score, but the person with the higher debt to income ratio is going to pay a higher interest rate.
Okay. So from that standpoint, does that mean that a person with a 680 and a higher debt to income will not be able to qualify at all, or what should they do?
That could be possible. Someone who qualifies today potentially will not qualify, or will have to pay more in closing costs to buy the rate down. So
okay, so it is possible to buy the rate down. So even though my credit score, so let me run this example. So let's just say we have 690 guy and a 790 guy, right?
Yes.
So the 790 guy is currently having a we're going to have lower mortgage payment starting in April. Yes. But the guy who has 690 credit score, he does have one little joker up his sleeve, right?
Yes.
He can throw in some money up front to lower his interest rate and keeping his monthly payment the same as the first guy.
That's true. Yes.
Okay. So the situation is not entirely bad, right?
No, there are workarounds as long as you work with a lender who is willing to take the time to figure it out.
And trust me, that is the big if. If you have the lender who is willing to take the time of their busy schedule to figure out those complex calculations for you. The good news is that Melissa is one of those people who, no matter what your situation is, no matter how complicated or complex or impossible sometimes it seems to finance a house, if we give it to Melissa, I often have the confidence that she will say, I might have a couple of options for you. That's her usual statement. Now, so in your opinion, let's just say that we have a buyer who wants to buy in March and go under contract in March, and buyer who wants to go under contract in April because it's a little bit easier because if his kids are in school or something. What would you recommend? And let's just say that both of them are in 680, 690 category as far as FICO score. What would you recommend in that case?
I would go house shopping this weekend and try to get under contract.
Okay, so tell me, as long, and that's actually a great question because we're not closing, right? If we go under contract in March, we're not closing till April. Do we need to be under contract to avoid that penalty, or do we need to be close to avoid that penalty?
Each lender is going to be slightly different, but what Guild has put in place is on any loan that closes after April 8th, the new pricing goes into effect.
Okay, so we need to close before April 8th.
Yeah, if someone gets into contract in like towards the end of March, we
That
would
won't help.
do a 15-day rate lock to get them closed before that.
Before that kicks in,
happen.
right? So
Yeah.
they can save a little bit of money.
So shop this weekend.
Go shop this weekend, that long story short. Or fork up more money later, either in terms of monthly payment or in terms of pure cash to buy down your interest rate, right?
Yep.
Okay, so long story short, there's ways around this. So that seems like a little bit of an obstacle for those people who absolutely must go shop later in the year. So there seems to be a couple of workarounds that we can do, but that will require some extra money from you guys.
Yes.
The only way to avoid paying extra money for the same house right now would be, to be honest, is to secure the house today, close on it today, and then figure out how to move in later.
Yeah, I'd say we have another probably solid 2 weeks to
go under contract to still execute that.
take
I need
advantage.
to send it out to everybody on my list as soon as possible. So on that note, let me run and start working on that.
Yeah.
So, but before we go, Melissa, truly, you're probably one of the most knowledgeable people as far as figuring out all kind of loopholes and sneaky ways to lower the monthly mortgage payments for my clients. So tell me, how can people contact you to see if you can help them too?
Absolutely. Phone number is 214-535-6738, or just search Melissa Condensa in Google, YouTube, Instagram, Facebook. You'll find me in all those places.
Perfect. You don't even need to Google. I'm just going to put the link to her YouTube channel in the description below, so you can just click and then start. So if you would go to her latest updates, because some of the updates before might not have been as relevant to what's happening right now. So right now we're kind of going through a shift, and what's happening right now, it requires a lot of tinkering on Melissa's behalf. So watch her latest videos if you could, or contact her directly. It will be even better. Okay.
Yeah.
On that note, thank you so much, Melissa. You're wonderful as always, and we'll see you in the next video.
Okay, thank you.
Thanks.